Bitcoin obviously had a huge bull run the past 2 years, has hit some headwinds over the past 2 months. What is your outlook both on the technological, let's say the non-macro side, as well as on the macro side? I think Bitcoin actually likes inflation. It likes rising rising inflation expectations. It doesn't mind rising bond yields on the long term, on the long end. So all of that is good for Bitcoin. However, you do have the massive potential of the Fed tightening liquidity, taking the punch bowl away, and specifically raising rates and quantitative tightening. How are you weighing the risk and rewards at this stage?
So I'm intermediate term neutral on Bitcoin. Long term, I'm still bullish fundamentally. And the way I would characterize that is, basically in this kind of you know, period of where the Fed is trying to pull back the punch bowl, where there's less stimulus, where money supply is growing slower than it was, now than it was over the past couple years. That is somewhat of a headwind for Bitcoin, especially because NYDIG put out a good chart the other day showing that, from 2011 to 2019, Bitcoin didn't have very strong equity, positive equity correlation. Sometimes it was positively correlated, sometimes it was negatively correlated. It was kind of so small that it was its own thing. Now, it tends to like higher liquidity environments, but overall, there wasn't very strong correlation. Ever since 2020, it's had very positive correlation, and I think partially that's because institutions became a big part of the market, and two, because with so much stimulus, almost everything was correlated positively. So anything other than like say cash and gold, most things went up a lot, over the past couple years, and so I think going forward, I think these correlations are somewhat heavy on Bitcoin. But I think that, when you have something that is fundamentally better than something else, eventually that correlation breaks down, and you can start kind of grinding higher. And so, one thing I would point to is that, for example, let's say ARK, for example, or, as a proxy for unprofitable growth stocks. They peaked in February 2021, and they've had this very weak period. Bitcoin didn't peak in 2021, but it did peak around that springtime. Then it went down quite a bit. Then it had a rally, and actually it very slightly touched new all-time highs. But anyone looking at the chart can see it's been in this consolidation ever since the first quarter of 2021. And so the way I would describe it is that it's separating in terms of magnitude rather than direction. So it's kind of correlating with the ARK basket in the sense that both of them had very rough years. But whereas ARK, is down, something like 50%, it's continually hit lower lows. Whereas Bitcoin has instead kind of consolidated sideways. And so I think that's something to watch for a high quality asset where, it holds up better than weaker things when it's having a rough time. And that sets up the foundation for another run, I think, when the macro conditions improve. We see over this time that, during the 2020 period and going into 2022, a lot. So there's not a lot of new demand for Bitcoin. That's basically what's been taken off the market by the lack of stimulus. That the new demand coming in is not as high as it was back in 2020 and then the very early phase of 2021. However, the supply side is interesting because a lot of the weak hands have sold out. A lot of the coins have shifted more towards the illiquid strong hands that have a low propensity to sell. And so a lot of indicators suggest that basically whenever demand does come back into the market, it's kind of like a cold spring. And so that's how I'd phrase it overall, that the conditions are good, but it needs a spark. And so I don't see a spark, anywhere super close right now. So that's why I'm kind of neutral in the intermediate term. I'm just kind of watching the market for catalysts. But I think longer term is still very attractive. I also think that Taproot, it got a lot of attention. The upgrade to Bitcoin in late 2021 got a lot of attention when it happened, and now it's kind of died off. But I think that's going to have very positive implications for the Bitcoin network in terms of technology. I think it greatly improves the Lightning Network that I'm bullish on long term. And so I think that basically, while the price is consolidating sideways, all the developers are still working on Bitcoin, building out the rails, building out Bitcoin as both a payment network and an asset. And so I think that's all continuing to grow and get stronger.
Mm. Yeah, and I also just note about the macro, which is that the huge epic bull run up for Bitcoin in 2016 and 2017 happened while the Fed was raising rates. So it's not a purely macro asset like a lot of things. I also your a neutral outlook in the medium term, long term, you're still bullish. How are you weighing, discounting, estimating the likelihood of a serious correction that we saw in 2018, somewhere around the 70% or 80% correction? Obviously, that's always possible for any asset. But are you saying that that is, small, negligible, moderate, something that people should think about, something that people should have a plan for, or is it, not really on your radar?
I would say moderate, and I think it's partially related to what happens in energy and what happens to policymakers. So basically, it's partially, you're kind of estimating human decisions, and therefore it's hard to put a percentage on it. And that's why I like to say that, I don't know if the market's going to go sideways. I don't know if it's going to have this kind of, big kind of, kind of a sharp correction. That partially depends on decisions that I can't forecast. But I think we're in a window where we are at risk for a much wider variety of sideways to downward moves that I think risk managers have to be aware of. And so I think that that's why, you know, having some cash or bond exposure is not a bad idea in this environment because you can rebalance into your preferred assets. I also think that more defensive value, higher yielding type of assets are somewhat of a safe haven, at least relatively speaking, in that kind of environment. I think they can hold their own. If you look at, that sell-off that happened in quarter four 2018, um, you know, basically a lot of that was concentrated in the growth stocks. Right? So Apple was off well over 30%. The S&P 500 was down 20% roughly. Generally the more defensive value things held up pretty well, and even actually emerging markets held up reasonably well in that sell-off. People often assume that they have to go down more than the S&P 500 in a sell-off, and that's not necessarily the case, depending on what's causing that sell-off. And so I think that there are areas that you can reduce your volatility by having exposure to. I think we have to also keep watching gold because, as I pointed out, the fact that it's held up pretty well, even in this kind of sharp upward move in nominal and real yields, has been interesting. And so if you start to see confirmation, if you start to see higher highs, out of this kind of sideways consolidation in gold, I think that's one of the I think the risk management tools that portfolio managers can use, either with the gold equities or gold itself. I think that's something to keep on their radar that could help them maybe reduce the severity of a down move. Because obviously, if you have a move that's kind of illiquid, then everything gets punished, right? But if you have kind of a slower grinding type of downtrend, gold can often do pretty well in that environment. So I think it's something to keep watching.
What